We've already just put in a new nominal all-time high. We're close enough to that, just a 10 or 20% move, nothing major, a 10 or 20% move puts us solidly in a new regime. A 30, 40, 50% move in the gold-dollar exchange ratio is a game changer.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin specials for December 11th through December 18th, 2023, while supplies last. First, we feature 1 10th-ounce gold maples at just $30 over melt with a minimum order of 5. Next, we have silver eagles at $4.99 over spot, making this a great time to swap silver bars into silver eagles at the lowest premium in years. Finally, constitutional 90% silver is just $3 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Lobo Tiggre, the independent speculator. Lobo, thank you so much for joining us today.
Thanks for having me back on the show, Elijah.
Well, it's great to have you, and an exciting day in the markets as we record this on Thursday, the day after the Fed announcement, and it seems like the markets are taking what the Fed said to be quite dovish. The Fed suggesting they could have multiple rate hikes next year. We saw a pop in the gold price after that big sell-off, and we also see now all-time highs for the Dow. Your take on what is happening and the Fed's announcement?
Well, there's a couple things coming together here. And I tweeted out a meme yesterday that our resident meme master, Kyle Johnson, he's quite funny. He came up with a dove. And so it's the new logo, that eagle over the Fed's front door. They're going to replace it with his dove with an olive branch in there, the dovish thing. There's no question that, what is dovish? But for all year and longer, every time the Fed has done anything that was less than aggressive, Powell has then come out and whipped out his jawbone to beat the market down, to don't get excited. This doesn't mean we're done fighting inflation. There's more bad stuff to come, maybe, right? And he did not do that this time. Multiple opportunities to do that, and he didn't. So, this is not a pivot in monetary policy, but it's clearly a pivot in Powell's stance here, which is a leading indicator, perhaps. And so I think the markets are, if not right, then at least it's understandable why they've reacted the way they did. There's a key point here, though, Elijah, that I think is really important. And remember that, a couple pieces. Remember that a lot of this trading, you see these instantaneous market reactions, and we saw this yesterday when the FOMC statement came out, and stocks went vertical, right? That's not mom and pop calling up their stockbroker and say, buy me some more Exxon Mobil or something like that. That's computers, that's algos. The moment the press release comes out, they look for these keywords and boom, they're trying to beat their competitors by a fraction of a second, right? To capitalize on the likely response. And what happens is that when so much of the trading is done by robots, which react instantaneously, you get these ridiculous responses. We get huge swings in the market. It's up on this news. The next day it's down on this other news, right? Here today, gone tomorrow. It's not like the average investor has changed his or her mind that fast. It's the machines and how they're programmed to respond to these different data points. By being so-called data dependent, and they manage the economy or try to, that has made investors data dependent to, I think, an unhealthy extreme. So every new data point produces a big swing. Now, Powell's dovishness, I think, does justify market optimism. Now, that doesn't mean that the market is cheap and it's going up, but I understand why, this is a real shift, and it makes sense that investors, like the humans, would respond in this way. But for the metals that you and I and our audience at Liberty and Finance care about the most, particularly gold, it's not like pork bellies or copper even, it's money. And so the place to look there is the Forex market, not just the stock market or even the bond market. And so it made sense for this change for the dollar to go down, right? But that's not the only data point. And I think in many ways, the response yesterday, Fed Day, was overdone, particularly since today was ECB Day. And if you're going to look at gold as money, as a currency or a form of money that competes with the dollar, the euro, and everything else, if you look at it through the lens of Forex, then you really can't just look at what the Fed did. You have to compare what the Fed did to what the ECB did. Or the Bank of England had news out today, and the Bank of Japan is finally becoming relevant again. China is out there as a major player now, which wasn't the case before. So if you think of gold as money, then you look at gold as a Forex transaction. That's why I always refer to it not as the price of gold, but the gold-dollar exchange ratio. Right? If you look at it that way, then you can't just look at one central bank's actions. You have to look at it in the context of the other central banks and their fiat currencies. And what are they all doing? Well, they're all debasing, therefore yay gold. But in this particular moment, we had Lagarde came out, and there was a very black and white difference. It's not just a nuance of her scarf was a deeper color blue than Powell's tie, right? And the nonsense that people look into. Powell said, he admitted in the Q&A, he said, yes, we talked about when to cut rates. Lagarde said exactly the opposite. We did not even discuss rate cuts. So the ECB decision nominally is the same as the Fed's, right? They did nothing, both paused. But Powell talked about rate cuts. Lagarde says we're not even talking about it. The distinct difference there, much more hawkish. So today, as you and I are recording this conversation, dollar's down again. Euro was up in comparison. Alternatives to the dollar are up while the dollar is down. And I think this is in part due to the ECB, not just the Fed. And going forward, people who think that gold is money need to keep their eye on that multivariate race. Now, if you have a very long-term view, if you're stacking your gold and your silver, right, for the decades ahead, these gyrations don't matter. You and I know that gold is money, right? Silver may be the poor man's gold. Darth Silver might have some things to say about that, but they're real values, which will be there when all the fiats continue their race to the bottom, right? The race to debase. But if you're investing in mining stocks, gold stocks, silver stocks, if you're a stock market speculator the way I am, like I save in bullion, that's not a question. But if I'm trying to make money, I'm speculating on the stocks. And then we have to have this other consideration we talked about, where is the dollar wrecking ball likely to go next? For the moment, it looks good for gold, for monetary metals, because the ECB has come out more hawkish than the Fed. But that could easily change.
Now, when it comes to what we've seen this year, it is pretty impressive, actually, when we look at the precious metal markets and also a market that you have called as well this year is uranium. And it has outperformed a lot of what people were expecting. So can you give us kind of a wrap of what we've seen this year? And then we can maybe discuss as we go into 2024 what you see for the markets.
Sure. And it's an interesting contrast there because I stood in front of a large audience at a Gold Bug conference in late 2022, Gold Bug conference, and I said my highest conviction trade, I'm bullish on gold and silver and other things, but my highest conviction trade for 2023 is uranium. And they didn't boo me and throw rotten tomatoes at me, but I'm not sure how many people listened. So for our audience here at Liberty and Finance, you'll be happy to know that I stood at that same conference and I said, last year I called uranium, that worked out pretty well. This year, my highest confidence trade is gold. And I feel I'm not just a gold bug excited about gold. I mean, that's hardly a headline. The difference is that I look at what I see as this global recession unfolding, all these other things, and I have that level of confidence that I had about uranium last year, I have about gold this year. I think it's all but baked in the cake. I'm very keen, and I am looking to put my own money into this right now. I was hoping to have a bit of a better opportunity to do some shopping this tax loss season, but there's some opportunities there, and I'm looking to deploy more cash. To answer the question, though, about uranium, I'm very bullish still. I think that's a multi-decade bull market in the making. I think in the very nearest term, however, it has gone almost vertical, and it's natural to expect a breather. And there is mothballed production coming online now. There are low-cost projects being built now. And the major producers of the world who had cut back their production voluntarily, sort of like OPEC, right? They are ramping back up again. So I don't expect the same kind of huge gain in 2024 that we saw in 2023. We have now reached the incentive price level. So I think some consolidation here is highly likely. And then, once that low-hanging fruit of easy pounds to bring on the market gets used up, then I think it's off to the races again.
Now, when it comes to what we've seen in 2023 for gold, it hasn't really broken out of the all-time highs that dramatically. We just got a week and a half ago on Sunday where we saw the spike above 2,100. But it does seem like it's sustaining these levels, and now we're seeing it back above 2,000. Do you see much more consolidation from here before we really successfully, for multiple days, break into new all-time highs?
Yeah, well, if you ask me about the that's really a market timing question, Elijah. I'm not going to stick my paw in that trap. But I will say that I think that spike, that Sunday night, was very significant. I mean, I think most of the industry insiders, the veterans, and I'm not talking mom and pop types like you and me that we go down to the local coin shop to buy our shiny new Buffalo or Maple Leaf. I'm talking, comics traders and whatnot, Wall Street types who dabble in this. They have been waiting for gold to go back down the way it did after 2011. And in many ways, it's astounding that gold has held up that well in the face of what I think is the conventional wisdom that we had another spike and it should go down. And so for something like that Sunday night to happen, this big move to be to the upside instead of the downside, with so many skittish, long-tailed cats in a room full of rocking chairs, right? We didn't get the market reaction that you would think. There was a big move, and it was up instead of down. So that tells me there's a significant shift, that maybe the bears have started to realize that gold's not going away. And that changes a lot. If people who had their fingers held over the sell button, not, just waiting for gold to visibly break down so that they wouldn't be the last one out of the rooms. If now they're switching and now they're thinking about the buy button because, it's not going down. Well, maybe the next big move is up. Well, I don't want to buy too soon maybe, but I don't want to chase it. But if the next big move is up, I have to be thinking about that buy button. So it's just one night. I'm not going to, bet my whole portfolio or bet the farm on just one move like that. But I think it's very significant. And the action that we've seen since then, gold above 2,000. You think about it, for the actual business of mining gold, speculating on junior gold stocks is a whole nother kettle of fish. But for the actual industry, for the business of mining gold, the gold price since 2020 has been fantastic. It's been a dream come true. And the better companies have made tons of cash. And the not so better companies have had the opportunity to repair their balance sheets and fix up their assets. Operating assets and so on, rationalize their portfolios of mines and projects. I think that sets the industry itself up for tremendous success going forward. If I'm right about higher gold dollar exchange ratios ahead, which your audience probably is sympathetic to, those companies having cleaned up their acts or working on that now should do very well. And the good news for the people like me looking for those hockey stick charts, right? That junior that gets taken over or makes a big discovery. The setup for the majors to be in shape to make those acquisitions in the years ahead is very positive. I'm not sure I answered your question. I think I got on a side topic here with the gold companies, but what was the question?
I think it was a more market timing question, right? Of maybe the question, I guess, would be for investors looking to take advantage of, a possible move higher. You mentioned how you were looking possibly at tax loss season. I know myself, I was like, this is interesting. Supports around 1950. And yesterday, it's like, oh, wait a second. Did we just miss the dip there in gold? But your perspective kind of on scaling in here.
No, I hear you. I've been wrestling with that because I had a shopping list of things that I thought, good companies that were down on the year and were likely to see some really heavy tax loss selling, especially with, gains in the Magnificent Seven or what have you out there. People have real gains out there. Even Bitcoin, they have gains to offset with losses on. So I thought we'd get some protracted tax loss selling this year. And then gold goes to a nominal all-time high and kind of throws that out the window. Okay, so to answer the question, the easy way to answer this is, it's hard for me to tell anybody that gold at 2044 or whatever it is at the moment, that's a cheap bargain, run out and buy gold. But fortunately for buyers, the gold stocks have underperformed. That bearishness that I talked about, the people with their finger over the sell button, that has held many of the gold stocks down, unreasonably down, like unrealistically down compared to their earnings capacity. That's an opportunity. Now, long-suffering gold bugs, they don't want another opportunity. They just want gold to go to the moon now and take their gold stocks there now. Sorry, right? That's not in my power to deliver. But for those who are looking to buy, those who are coming new to the thing, I think that's terrific. Like the metal has been at or near record highs for 3 years, going on 4. And the stocks are on sale like when gold was $1,000 cheaper. That's a huge opportunity for anybody who's new to it or anybody who has liquidity and has the guts to see that. And so, okay, tax loss season didn't bring us quite the buying opportunities I'd hoped for, but there's still great companies that are relatively on sale. If they're not at 52-week lows anymore, many of them are still, closer to the 52-week low than the 52-week high, let's say, in the bottom half of their range. And that's an interesting opportunity, like right now, as in this week. And the one other caveat here, try to be helpful to the audience, would be, if you're looking at something and it hasn't budged at all, if gold can hit a new nominal all-time high and that stock doesn't move at all, that is a red flag. If it hasn't moved on a new nominal all-time high, what makes you so sure it's going to move in the next breakout, right? So that's not a blanket 100% rule, but it is certainly a red flag to keep an eye out. If I'm looking to buy, if I'm looking to put more cash in the market this month during what's left of tax loss season, I want to see something that it's at least, curved up from a bottom. It has responded to the higher recent gold prices.
Now, when it comes to the economy in 2024, it seems like a lot of people have been looking for a recession for quite a while. I guess it's the old joke that economists predicted 5 of the last 3 recessions. But your take on that, in 2024, it does seem like certain things are coming to a head to have troubles in the economy in 2024. So do you think we are going to see a recession, and how do you expect the markets to react to that?
I may have to eat my hat here on this in the not too distant future, but I think we are in a recession. I think the global recession is harder than at the very least, global weakness is rampant. But you have major economies like Germany, and China's never going to report, I think, negative GDP, but their negative inflation, like they're actually reporting deflation, that's a huge red flag for the Chinese economy. So I see the global economy as in recession, or at least in, significant, profound, and enduring weakness. And I don't think the U.S. will be spared, nor has been spared. I think people keep looking at the strong, like labor consumer, right? The job market's so great, people are still spending, everything's fine. Well, in a post-pandemic environment, I think that's a misleading conclusion. And we've seen earnings recessions, revenue recessions. I mean, the number of companies giving lower guidance, okay, we're having earnings beats, but that's because the earnings guidances were all slashed. And many of the big CEOs, the banks, the big banks that deal with the people across the country, their outlooks are very gloomy. So, team soft landing today, we had lower jobs claims today, we had higher retail sales, and after the The Fed's decision, everybody, team soft landing, they're out there doing victory laps big time, trumpets and banners are waving. But I don't think the reality is there. I think the average person feels it. That's why the current administration in the U.S. is in trouble, because the people out on the street, they can see the reality. They know what's going on. So my view is that it's a question of when the recession becomes undeniable. And I think that happens willy-nilly, but there's a chance for it to happen very suddenly if the Fed breaks something else. And that could happen. I have said that I expect it to become obvious by the end of this year, not next. I only have a couple weeks left, crossing my closet. I don't want anything bad to happen, but I might still be right. More likely it'll be Q1 or Q2 next year. But I will say, Elijah, we are in historically unprecedented times. You can talk about the Spanish flu 100 years ago, but the world of finance was nothing like it then. There was no QT. Well, we're on a gold standard, right? The world is entirely different. We have literally never been in a situation like this in all of history. So maybe I'm wrong. Maybe Team Soft Landing is right. Maybe this time is different. Now, everything I know about history and economics and human psychology tells me I'm right and Team Soft Landing is wrong. This time is not different. Long and variable lags, or maybe just longer and more variable this time. But if the recession denial doesn't go away by next summer, Elijah, then I'll have to really have a serious look in the mirror and ask myself if I'm not wrong. And if I am, and if the economy is clearly going to a new growth phase, then I'll admit it. I'll change my marching orders. I'll start buying copper, maybe lithium then too. We'll see what else is on sale or what looks good.
I know recession always really brings opportunities as well. So it's important to play the cards you're dealt and to take the opportunity as we see it. Now, when it comes to the struggling economy, you mentioned how there's a lot of sectors that are hurting right now, and we're probably in recession right now. There's also the debt situation in the U.S. that is a major issue there, and it's not obvious how this can be resolved as well. Do you see any, with regard to the debt situation, any new events in 2024 coming up, or any new difficulties?
Yeah, but I got to say it's important. I'm not dismissing it. Yes, of course it's important. The national debt is important. But I remember in the 70s when the national debt hit $1 trillion or whatever it was, the first trillion. I remember there was some big round number in the 70s when gold was going nuts and people were talking about how it's going to be the end of the world, right? This was unsustainable. And here we are, 50 years later, 50 times more national debt on the way. I forget when we're supposed to hit 50 trillion, but it's not so long now. We're adding more than $1 trillion a year. So anyway, it's serious. It's important. I honestly don't see any way out but through the ringer. Like at some point, that won't just break something. That will force a reset. And an economic reset is not a small thing. That is huge. But, that might happen for 10 years. In terms of how I invest now, how I'm speculating now, the trends that will make me money now or in the next few years, as important as that is, I just set it aside. I have no idea when that piper will come collect his pay, but it might not be for a while. And the powers that be have clearly shown that they can and will do anything. They will stop at nothing to postpone that judgment day. We think that what they did in response to the pandemic was outrageous and crazy. I'm sure that was not the limits of their outrageousness and craziness. $2 trillion a year deficit. There were people talking about $10 trillion a year deficits in the pandemic. Didn't go there, but even then they were talking about it. So $10 trillion a year, 20, who knows? I think when the powers that be are realistically contemplating the prospect of facing a firing squad in their lifetime for their mismanagement of the economy in the country, they will stop at nothing. And we'll see how far down the road they can kick the can.
And if people would like to continue to follow your work, they can go to independentspeculator.com. What will they find there?
Lots of free stuff. And I would highly recommend typing cheat sheet or just cheat in the little corner magnifying lens search tool. And those cheat sheets are little how-tos on how to read drill results and economic studies and things like that. Very, very useful stuff. There's also a free weekly letter called the Speculator's Digest. If you sign up for that, I promise we will not spam you with a flood of daily advertisements. And it'll show you something about how I think, how I analyze things. And then from that, if you want to hire me to be your due diligence guy, there will be links.
Fantastic. We'll put a link to your website in the description of this video. Before we let you go, Lobo, any last thoughts you'd like to leave with our viewers?
You know, I'm not prone to the prediction racket, Elijah, and I'm not one to really pound the table. But my thoughts on how the market is going to do for gold. I mean, if it's true, consider this, like the average gold price for the last 3 years, if that's now a floor and there is a big breakout, you know, those ridiculous numbers that we were embarrassed to talk about of, you know, how many thousands of dollars gold might go to, those are realistic. Right? We've already just put in a new nominal all-time high. I mean, it was 2152 or something like that for a flash. We're close enough to that, you know, just a 10 or 20% move, nothing major, a 10 or 20% move puts us solidly in a new regime. A 30, 40, 50% move in the gold dollar exchange ratio is a game changer. And, you know, it has economics implications, it has global stability implications, but it has a huge money-making implication for people invested in the right stocks.
All right. Well, it sounds like exciting times ahead. Lobo, thank you so much for your time today. God bless and Merry Christmas.
Yeah, thank you, Elijah. Happy holidays.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.